Independence. There you go. You're free. How do you grow in 2017? You've cut the umbilical cord. We know that you've got the insurance and the non-insurance business. What's the balance of the business going to be as the year goes forward for you?
Well, listen, I think we start by looking at what the business is today, and we've had first of all, we had a fantastic year last year. We're very pleased, good results. But really that was on the basis of two things. First of all, we've got a very strong brand, and we also have a technology platform which is scalable. And so we're starting from that base, and we have to apply to that an element of speed to get the company to go faster, to get more out of the existing assets that we've got. So we've applied, strengthened the management team, brought in some software engineering skills, development skills, and brought in some new digital skills to put around that strong brand, around that technology core, to help the company go faster, to deliver customers more savings.
You mentioned the strong brand. Nobody's going to sing on this set, but we all know the advertising that you're talking about. I hate to take us into more sort of nerdy territory, but let's talk a little bit about the Ogden rate. This is something that insurers have been dealing with. Authorities cutting the discount rate used to calculate payouts for personal injury claims. I've read some reports. This, of course, weighed on the insurance industry recently when this happened, but some reports suggesting that actually this could be something that pushes prices up and therefore is better for comparison sites. What's your view?
Well, it's really interesting. Obviously, we're not an insurer, we're a technology company, but if you go back to the growth opportunity which we're excited about, before we even talk about the Ogden rate, let's talk about why consumers don't switch today. Because out of every 10 consumers today, 2 switch regularly. So 2 switch something like car insurance, home insurance, energy bills every year, but 8 out of 10 don't. And out of that 8 out of 10, 6 only switch infrequently, and 2 have never switched anything. So we've got 8 out of 10 people who have an opportunity to switch more today, and we're focused on that 8 out of 10. When you look at the Ogden rate, we hear from the sector that premiums are likely to go up, insurance premiums, and when insurance premiums go up, prices go up, and when prices go up, consumers start to look around, and they're more likely to switch. And so that's our job then, to help consumers switch more when we get price increases. So I think that's a growth opportunity for us in the sector.
You've saved £1 billion for customers in 2016, according to your statement. The interactions are up by 26%. Take me over the conversion rate. What is the one thing that you are going to do to get me to convert? I go on Go Compare. What is the holy grail of converting me to switch?
It's making it easy for you, reducing the hassle. Reducing hassle.
Not price.
Price is super important for everybody until they can't find what they want, right? Right? So it really all is about reducing hassle, number one, making it easy. And then even when you make it easy for people, you know what? Some people just can't be bothered, right? Some people just can't be bothered to save money. And that's the problem we have. And those 8 out of 10 people, you've got people who say they can't be bothered because it's too much hassle, i.e. there are too many things to fill on the website.
Maybe that says something about the time value of money, doesn't it?
Exactly.
Or the value of our time, rather. You've worked in a lot of sectors, I know, Matthew. This is insurance related, but it's technology, you're very keen to point out. But people mention venture capital around your story, but that's not because you're a VC. So what is it that you're doing in that space?
No, listen, we're a highly cash-generative business, and we wish to be smart about utilising that cash and that capital to create value for the business and our shareholders. And rather than putting the capital back into our existing technology platforms, which we think are scalable, we'd like to apply that capital to the difficult problems that we've been talking about. So how do you reduce the hassle? And how do you reduce the bother? And we'd like to find innovative businesses, startups, investments, companies, and our own ideas that we put that cash and that capital into in a venture-style way. And so we're trying to be quite innovative and quick and entrepreneurial.
Do you have those targets in mind already, or are they yet to come?
Listen, we're working hard on that. We're a public company, so we can't say anything until we've got something to say. But listen, we're working hard on ideas, and we've got a team that do that today. So.
Are valuations more expensive? Because I'm hearing a lot of people want to put their money off quoted markets into private markets. Are valuations expensive at the moment on the assets that you're looking at? Do you find that you're being snapped at quickly?
Listen, I think it's a very pacey market. I think there's a lot of liquidity in the market, a lot of people out there looking for interesting ideas. So we have to be quick. And so we've actually built a management team of entrepreneurs that are designed to be quick, and that's the idea.